What's up, you guys, and welcome back to Cryptic Crypto. Today, we're going to be looking at the charts. We have had a move slightly down, but that's okay. We figured that we'd have some sort of pullback at this time. We're going to jump into the charts. We're going to jump in and look at some of the indicators that are going on right now, and we're going to look at an interview that was done today on CNBC that's talking about Bitcoin, the volatility, and what kind of confidence we have on where the market is going. So if that sounds interesting to you guys, stick around. If you haven't already, hit the subscribe button, hit that like button, hit the notification bell to get all the latest updates. Let's jump into it. All right, this is Katie Stockton. This is Joe Kernam. They are doing an interview, and Katie is giving her outlook on Bitcoin's most recent rally. Now, listen to the way that she describes where we're at. She kind of breaks down that we just saw an explosive move, and she'd like to see something a little bit less volatile. I'm going to stop the screen a few times as we go through this and give a little bit of outlook as far as the interview goes. So let's jump into it and see how she answers the first question by Joe.
As well as a CNBC contributor, and starting with Bitcoin, might be a little bit of a stretch, Katie, but in the past you've talked about it can be, we talked dog or tail and what wags whom, but it can be a gauge of sentiment for risk, and it definitely has kind of moved ahead of some of the equity markets. Like the S&P is still range bound at about 4,000. Has there been positive developments in Bitcoin that make you think the lows are in at 16,000, or you still think at some point we test that 14,000 level?
Well, I mean, the positive development is that it has rallied enough to give folks an exit who are looking for one. We've seen, a 40% up move just this month alone. The catch with that is that when you see such strong, very steep rallies, they are more characteristic of counter trend moves. What would be actually more bullish in sort of a contrarian fashion for Bitcoin and other altcoins would be like more of a slow grind higher, because that's something that's much more sustainable than, I think at one point we had 14 consecutive up days this month for Bitcoin.
All right, I wanted to pause it right there because I actually disagree with her. We don't typically see a slow grind upward in the crypto market, and I don't think we're going to see that until we get further down the road when cryptocurrency actually has a longer lifespan. Right now, cryptocurrency has only been living for 13 years, really only 10 with the ability to trade it. So maybe when crypto is around for 20 and 30 years, when the total market value is around 10 trillion, we can have slower grind upward, but we just got back to the point where the entire cryptocurrency market cap is $1 trillion. Apple's total market cap, one company in the S&P 500 is around $2 trillion. So just to put this into perspective, the entire cryptocurrency market cap is lower than one company in the S&P 500. So this is how far we still have to go. So when she says we need a slow grind upward, I still do not believe that we're in a point in cryptocurrency where we're going to see any sort of slow grinding movements. Usually when we get movements inside of Bitcoin, inside of altcoins, they are explosive moves. That's typically because the amount of money that's coming in has the ability to move it with these explosive moves, because the market cap of the entire crypto space is still so small. The amount of liquidity coming in moves it in a big way. So I don't think we will be at a point where these types of cryptocurrencies, Bitcoin, Ethereum, will move in small amounts until we get further into the life of cryptocurrencies, maybe 20 and 30 years. So I just wanted to provide that information. If we do see any movements, they're going to be swift and fast, guys. This is the cryptocurrency market. This is why we're in it. Bitcoin's gone up 40% in the past month. And this is the excitement and why we're in the space. This is the whole reason why we're here. It's because there's money to be made. The market can crash. It's not totally regulated to the point where everyone's going to be bailed out if something goes wrong. And this is free markets. And this is the reason why we're here. So I just wanted to do a counterpoint to that. Let's keep watching.
So we're skeptical as to the sustainability of this rally, which we are still viewing as counter trend, but we would acknowledge that it did clear the 200-day moving average as one threshold on the chart. This has happened before and it proved to be a false breakout, so we're not convinced we have a breakout here, but it is an incremental positive development on the chart. So we hope that this manifests itself in our longer term indicators, which still very much point lower. We have oversold conditions in place, but they've been in place for many, many months now. And it's not until we see the upturns in those gauges that we can really feel confident that we have something meaningful. And because it's happening.
All right, guys, I wanted to pause it there because I wanted to actually show you what she's talking about. The 200-day moving average is this right here. So this is the 200-day moving average. This is just a visual of what she's talking about. And if you dive into here, what she's saying is we've been under the 200-week standard moving average. It's the SMA, standard moving average, which is just a moving average of the price over 200 weeks. And that's why it's higher than the actual prices, because it's taking the average from all of these higher prices. That's why it's slower to move down than the actual price indicator. So what she's saying is it's been a year where the prices have been under this 200-week SMA, and we're just now getting to the point where we're breaking back through the 200-week SMA. Now in the previous, you can see there was a fake out here. We dropped back below it, which is what she kind of indicated for. And we do need to watch that. Also, if we go back to the 2020 area, you can see that it did come through here, break it a few times. Actually, it broke it once, which was a fake out, came back down to even lower levels, which is what we could see here, and then it broke back out to its final destination here in the bull run. So I think she's right to be cautious here and say, okay, we don't really know yet. We need to see some other indicators like the relative strength, which is kind of dying out on the weekly, but on a monthly time frame, it still looks relatively okay. So there's a few more things that we need to get confirmation of before we know if we're actually going to be in an extended bull rally, or even if we know that we're going to be entering into a bull market. All right, guys, so let's bring it back here to the rest of the interview.
Happened so quickly, it just hasn't had that impact yet.
So you think that it could be an opportunity for people that didn't sell on the way down, they could sell here? Or you're at neutral now for Bitcoin. Had you been at negative?
We had been at negative and we moved to neutral just to kind of impart that we're not bullish. So we're not bullish. We are looking for counter trend signals to develop as early as this week based on those trusty DeMark indicators that we use. And that to us would be something that would create some conviction behind using the rally as a selling opportunity. We have also notably behind the scenes seen some of the altcoins fall out of favor relative to Bitcoin. And that does show that there's the risk appetite might be falling off a little bit here.
All right, one last thing to note. She said that the appetite for coins other than Bitcoin is falling off, which means that there's starting to be less interest in altcoins, which actually is a great sign for Bitcoin. It means that some of the liquidity is being drawn out of the altcoins and being pushed back into Bitcoin. Typically, when you enter this part of the cycle, this is called the crypto spring, is really what it's called. We enter this phase where we're in this choppy mess. We go up, down, up, down, up, down. But typically in this time, we flip back into the Bitcoin dominance. Bitcoin dominance drives the markets. And the Bitcoin dominance is, I think, at around 43% of the entire crypto market. And so we typically see liquidation of some of those altcoins getting pushed back into Bitcoin, Bitcoin dominance going up, which in turn, ignites the entire bull market. So that's kind of what she's talking about there. Let's keep on digging into that.
How about the S&P had a good start to the year? NASDAQ had a pretty good day yesterday. Are you, would you call yourself neutral there now, or are you still looking for the downtrend to reassert itself?
I want to get excited about it, but I have to say we really just don't have any breakouts yet. We don't have any major improvement in our long-term indicators. The rally does show, to me, a little skittishness on the back of what we saw last week, which were some extremes in market breadth, We also saw a lot of overbought downturns last week. So we're really, again, here unconvinced of the sustainability of this rally. We do have resistance for the S&P 500, essentially in line around 4020 based on the weekly cloud. The 200-day moving average is also still in play as a resistance zone. We view these levels as cushions and not precise points. So we think that with resistance in line, with short-term overbought conditions having become widespread last week, and with still the dominant downtrend, that there is a lot of risk here. And we continue to watch for just the broader market, including the NASDAQ 100 names. We're watching the VIX, the volatility index, as it pertains to its 50-day moving average. If we see the 50-day cleared, that's at 2150 right now. I think we're maybe a point and a half away from that. A breakout above the 50-day has been associated with sort of volatility events and downdrafts in the major indices. So that's something that would be a bit of a risk metric to watch.
All right, guys. So really what she's saying at the end of that is a lot of stuff that I agree with, but I wanted to make a final note of the overall trend of where we're at right now in just the macro view and where we're heading. Is when you watch these interviews, you can see there's a shift, there's a turning going on. So she went from negative on Bitcoin to neutral. The Federal Reserve is about to come out in their next meeting, and they're slowing down on their rate hikes. So instead of their half a point raises, they've already indicated pretty much to us that it's going to be a 0.25 increase. They can't go much more because the 2-year yield has reached inversion, is coming back down, which is basically an indicator of what the Fed's going to do with their rates. They can't go any higher. You can't be hawkish when you're lowering rates. So there's an overall shift in the markets. I think people are right with maybe a soft landing coming with the recession. And I think a lot of this stuff is already priced in. I think overall, this is the most expected recession that we are ever going to have. Everyone's expecting it to come. That's why I think a lot of this stuff is already priced in. And we're starting to see the flippening happening. We're rounding off the bottom. And I think what we're going to see in the next 6 months is us coming up out of this rounded bottom and starting to move up. So guys, if you enjoyed the content, if you enjoyed what you heard here and you're getting some value out of this, remember again, please hit the like button. It helps the channel. It helps me make this content. It helps me know that you like what you're seeing. And anyways, guys, thanks for it. We'll see you next time. Have a good one.